A shocking shift has blindsided Washington, a long-trusted U.S. ally has walked away from America's doorstep and taken a multi-billion-dollar megaproject straight to Canada. And Donald Trump, he did not see this coming. In an unprecedented economic shakeup, one of America's closest partners has officially abandoned its U.S. investment plans, choosing Canada as the home for a massive new manufacturing megaplant. This decision has sent shockwaves through the White House, the business world, and global markets. Analysts warn that this could mean thousands of lost jobs, billions in economic activity slipping away, and a serious question mark hanging over America's competitiveness. As Trump reacts in disbelief, many are asking, what drove this ally to turn its back on the United States, and why now? It's often in the quiet moments of geopolitical maneuvering that the loudest signals emerge. When a long-standing ally abruptly redirects a massive investment, one that had been informally discussed, anticipated, even politically celebrated, it sends a message that goes far beyond the economics of job numbers or factory blueprints. It whispers something deeper about trust, confidence, and perceived stability. And in this case, that whisper has become a thunderclap. A multi-billion-dollar project does not simply change direction overnight. It moves because the people making the decision see something shifting beneath the surface. They sensed currents in the United States, political uncertainty, regulatory unpredictability, or perhaps a fracturing in long-term strategy that made the ground feel a little less solid than it once did. There's a psychological dimension here that's often missed. Nations behave like people. They invest where they feel understood, respected, and secure. When an ally chooses another country for such a monumental undertaking, it's not merely because the incentives were a bit sweeter or the tax structure slightly more appealing. Those details matter, but they do not outweigh the emotional calculus that sits behind every major economic leap. Money likes calm, it likes clarity, it likes the assurance that agreements made today will not be overturned tomorrow on a wave of political theatrics or sudden ideological shifts. If an ally sensed growing turbulence in the U.S. landscape, then the decision to relocate becomes less a rejection and more a survival instinct. For decades, America was the default destination for world-shaping projects. It was the place where ambition met opportunity without fear of instability. But allies are increasingly evaluating not just the promise of America, but the sustainability of that promise. They're analyzing America's internal conversations, its polarization, its policy swings, its volatile election cycles, and asking a difficult question: can long-term investments truly rest on a foundation that is constantly being rebuilt? This incident forces us to confront an uncomfortable truth. Global confidence is not static. It must be earned again and again. The fact that a trusted ally decided to plant its future elsewhere suggests that, at least in their eyes, the U.S. momentarily lost sight of the factors that once made it irresistible. That doesn't mean the decline is permanent or irreversible. It means the world is watching with sharper eyes than before, and decisions once made on historical reputation are now being made on present behavior. If America wishes to reclaim its magnetic pull, it must restore the traits that once defined it: predictability, unity, and a sense of direction that transcends election cycles. In every global relationship, trust is the currency that underwrites investment. When that trust wavers, even the most familiar partners will quietly drift toward safer harbors. What followed was not just a political reaction, it was a moment that exposed the emotional core of national leadership. Trump's disbelief was not the casual surprise of someone blindsided by an unexpected headline. It was the stunned realization that a long-assumed advantage had quietly eroded beneath him. For years, he positioned himself as a dealmaker who could bring industry back to American soil through force of will, pressure, and patriotism. So when an ally chose to redirect thousands of jobs and billions of dollars across the northern border, it challenged the narrative he had been building, that America was still the unquestioned magnet for global investment. The disbelief came from the sudden collision between expectation and reality. And that collision rippled outward, because the truth is, this wasn't just about one leader's emotional reaction. It revealed how fragile economic confidence can be when political rhetoric outpaces the structural work required to sustain it. Analysts quickly recognized the implications. This decision wasn't symbolic. It was tangible. It meant U.S. towns that were preparing for a wave of construction would now watch those opportunities take shape someplace else. It meant engineers, welders, logistics workers, and small businesses tied to the supply chain would see their prospects dim. This was a transfusion of economic life that had been promised to American communities but delivered elsewhere. And in the broader landscape of political theater, moments like these hit harder than speeches or slogans ever could. There's a psychological component in national disappointment that's difficult to quantify. When a country loses something it believed it already possessed, the emotional impact is magnified. It creates a sense of disorientation, a feeling that perhaps the ground rules of global economics have shifted in ways we didn't fully recognize. Trump's reaction mirrored a deeper public sentiment. If America is no longer the automatic first choice, what does that say about the direction we're heading? What does it say about our competitiveness, our unity, or our ability to maintain the kind of stability that long-term investors quietly crave? People often talk about job loss in terms of numbers, but beneath those numbers lies something more human. Jobs carry dignity, they carry hope. They represent the idea that progress is not a political talking point, but a lived reality. When thousands of those jobs slip away because another country appears to offer greater predictability or strategic advantage, it sends a message to American workers that the world is reevaluating what the United States brings to the table. That's a hard truth to swallow, and it's why this decision stung so intensely. But there is also clarity in moments like this. They force us to examine whether our systems, our policies, and our leadership are aligned with the future we claim to want. They reveal where confidence has weakened and where renewal is needed. Trump's disbelief, in that sense, becomes a stand-in for the nation's own awakening, a reminder that global influence must be maintained, not assumed. When the company finally explained its reasoning, it didn't couch its words in diplomatic ambiguity. It spoke with the kind of clarity that makes governments uncomfortable because it reveals what investors truly value beneath all the political noise. They pointed to incentives, yes, but incentives alone do not move a project of this magnitude. Tax breaks matter, but they're only the surface layer. What quietly influenced this decision were the deeper signals Canada has been sending for years. A reputation for stability, predictability, and a long-term strategic vision that doesn't pivot wildly with every election cycle. These are not dramatic qualities, but they are the ones that anchor billion-dollar decisions. There is a philosophical truth at the heart of economic behavior. Capital gravitates toward calm. It seeks environments where agreements are honored consistently, where policy doesn't swing like a pendulum driven by partisan winds, and where investors feel confident that their efforts will mature rather than be derailed. When the company compared its options, it wasn't simply weighing cost structures. It was evaluating the emotional climate of each nation. It was looking at the psychological ecosystem around its investment. Canada, in its quiet and often understated way, has cultivated that ecosystem. It presents an image of reliability, a steadiness that appeals to industries thinking not in quarters but in decades. Meanwhile, the United States has been wrestling with increasing political volatility, where the tone of leadership shifts dramatically depending on which party speaks the loudest. Investors take notice. They watch congressional gridlocks, public unrest, and the unpredictability of policy reversals, and they begin to ask themselves whether the landscape they're stepping into will still resemble itself a decade from now. The company saw that uncertainty and chose to sidestep it. One of the most revealing aspects of their explanation was the emphasis on trade advantages. Canada's position within global agreements subtly gives it access to markets and frameworks the U.S. sometimes complicates through tariffs, sanctions, or abrupt renegotiations. This doesn't mean the U.S. is hostile to trade. Rather, it means the U.S. often negotiates from a place of confrontation instead of cooperation. That may play well politically, but the psychological cost is that major investors begin to wonder whether they're entering a landscape defined by partnership or unpredictability. And then there's the cultural dimension. Canada's political environment, while not immune to division, does not radiate the same level of conflict that often defines American discourse. When a multinational corporation considers where to house its next generation of employees, engineers, and researchers, it thinks about the lived experience of those people. Will they want to raise families there? Will the social fabric support long-term growth? These aren't economic questions, they're human ones. And in this instance, the human considerations quietly tipped the scale. What the company ultimately chose was not simply a country, but a psychological climate, a place where its ambitions felt protected, not precarious. And if America wants to win decisions like this in the future, it must rebuild the atmosphere that once made it the safest place for the world's biggest bets. What makes this moment so striking is that it may not be an isolated miscalculation or a single missed opportunity. It could be a preview, a subtle indicator of a shift that has been gathering momentum beneath the surface, visible only to those who pay attention to the quiet patterns of global investment. The decision to choose Canada over the United States isn't just a singular event, it's part of a broader reevaluation happening among international corporations, sovereign funds, and strategic industries. They are asking a question that would have sounded unthinkable a decade ago. Is the U.S. still the safest long-term home for their most ambitious projects? And increasingly, they are willing to test alternatives. Canada, in many ways, has become the unexpected beneficiary of that evolving calculus. It's not the largest economy, nor the flashiest, nor the most aggressive in its global posture. But it has something that carries immense weight in a world defined by uncertainty, predictable governance. Investors have begun to prize that reliability even more than the traditional advantages the U.S. used to dominate. They see a country that doesn't threaten radical economic reinvention every 4 years, a country whose political disagreements rarely escalate into existential disputes about its identity or its commitments. That calmness may not generate headlines, but it generates trust. What's emerging is a quiet trend. Industries that require decades of planning, from green manufacturing to advanced materials to clean tech, are increasingly drawn to regions where the rules state the rules, and the political climate doesn't feel like a storm waiting to break. The U.S., with all its innovation and economic power, has been sending mixed signals. One administration champions incentives, the next seeks to dismantle them. One promises trade stability, the next threatens tariffs. Investors are not moral philosophers, they are custodians of risk, and risk hates inconsistency. This shift is not about any one leader, it's about the mood of the nation. America's internal tensions, its volatile policy environment, its tendency to turn economic strategy into ideological warfare, all of this creates noise. And when the noise becomes loud enough, even loyal partners begin searching for quieter rooms. They may still love the energy, the scale, and the entrepreneurial spirit of the U.S., but they're increasingly unsure whether the country can commit to a direction long enough to make them. Investments feel secure. If this trend continues, the implications go far beyond one megaproject. It suggests a future in which America is no longer the automatic gravitational center of global industry, a future in which investment flows to places that project steadiness rather than spectacle. And once momentum shifts, even gradually, it becomes incredibly hard to reverse. Investors follow patterns. Once they see a safer option, they rarely return to uncertainty without compelling reason. This is the quiet warning embedded in the company's decision. The world is choosing reliability over legacy. And unless the United States rediscovers the value of long-term stability, more decisions like this one will slip quietly across the border. The political reverberations from this decision didn't take long to surface. Almost immediately, critics turned their attention inward, asking not just how this happened, but what it revealed about the United States' current trajectory. When a massive investment slips away, the instinct is to blame an administration, either the one in power or the one preparing to reclaim it. But beneath the partisan commentary lies a deeper truth. Global partners do not respond to individual politicians as much as they respond to the environment those politicians help create. The loss of this megaproject raised uncomfortable questions about whether U.S. policies, regulations, or leadership styles have begun to undermine the country's long-standing reputation as the world's most dependable economic anchor. There is something profoundly psychological at work here. Nations, like individuals, project a kind of emotional signature, an energy that communicates either confidence or uncertainty. Investors perceive that signature long before it appears in data or reports, and in recent years, the U.S. has broadcast a kind of internal turbulence that hasn't gone unnoticed. Constant regulatory whiplash, rising partisan hostility, and the shifting sands of economic strategy have made it harder for allies to assume that the America they negotiate with today will resemble the America they operate in tomorrow. Critics weren't simply questioning leadership, they were questioning the emotional climate that leadership has allowed to flourish. This is why the political response has been so intense. Losing a major investment is painful, but losing the perception of reliability is far more damaging. Some critics argue that the U.S. is becoming reactive instead of strategic, responding to crises rather than shaping the future, making decisions to score political points instead of building the kind of cohesive long-term vision that attracts global capital. When leadership is fragmented, policy becomes temporary, and in a world where megaprojects require decades of stability, temporary simply doesn't cut it. And so the conversation shifted from the specifics of a single deal to the implications for America's broader identity. Is the U.S. still the place where ambition finds a secure home, or has the political climate grown so polarized, so erratic, that even close allies quietly seek alternatives? These aren't questions people ask lightly, and they aren't questions that should be dismissed as political theater. They reflect a global perception that has slowly, perhaps reluctantly, begun to recalibrate, yet there is also an opportunity hidden in this moment. The criticism, however sharp, reveals that the world still expects more from the United States. It still believes the U.S. is capable of leading, capable of projecting stability, capable of regaining the confidence it once commanded effortlessly. What it demands now is not perfection, but coherence, the willingness to pursue a long-term economic vision that transcends the noise of elections and the volatility of political personalities. If America can reclaim that sense of direction, allies will follow its lead again. But until then, this decision stands as a reminder that trust, once shaken, must be rebuilt with intention, not assumed into existence. What emerges in the aftermath of this decision is something even more revealing than economic loss or political discomfort. It is the dawning recognition that global influence is not a trophy a nation wins once and keeps forever. It is a living, breathing relationship that must be renewed through consistency, clarity, and self-awareness. And when an ally, especially one historically aligned with American interests, chooses a different path, it forces the United States to confront the gap between the image it projects and the reality others are perceiving. That gap has grown wider than most leaders care to admit. What this moment exposes is a kind of strategic vulnerability, not in military terms, but in psychological terms. For decades, the U.S. operated under the assumption that its economic gravity was so strong, so self-evident, that partners would naturally orbit around it. But gravity weakens when the core becomes unstable. Trade partners, investors, and allied governments have begun quietly recalibrating their expectations, not because they desire a diminished America, but because they need predictability in a world already saturated with uncertainty. When the U.S. oscillates between competing visions of itself, sometimes annually, sometimes monthly, other nations begin building contingency plans. This megaproject simply became the first visible proof of that shift. Yet there's another layer here, one that goes beyond strategy and into collective psychology. Nations respond to the emotional tone of the countries they work with, and for the past several years, the U.S. has projected an inner tension, a kind of unresolved identity conflict that makes long-term collaboration feel more fragile. One moment, America speaks with confidence about innovation, partnership, and global leadership. The next, it retreats into hostility, suspicion, or isolation. That inconsistency, even when unintended, signals to allies that the foundation is still shaking. And no corporation, no government, no strategic partner wants to build on ground that feels restless. But there is a constructive way to interpret this shift. The fact that America is feeling the consequences now means the system is still responsive, still capable of course correction. The world hasn't written off the United States. It is signaling what it needs from the United States. It needs steadiness. It needs vision. It needs a country willing to align its domestic conversations with its global responsibilities. And if the U.S. can do that, if it can reclaim its coherence, its influence will not just return, it will deepen. Because influence built through humility and renewal is stronger than influence taken for granted. This moment, then, is not a verdict, but a warning. A reminder that leadership isn't maintained through legacy, it's maintained through intention. And the world is watching to see whether America will choose to rebuild that intention before more opportunities quietly slip away.